Hi, I know this video has very little views. I'm new to YouTube. I'm not trying to say that I know it all. I just want to share with you my portfolio and my experience that I've had over the past 2.5 years investing in stocks. I'm 24 and I've built up a portfolio of 63,000 with about 18,000 of those being gains. So at the minute I hold two portfolios, one in Trading 212 and the other in Invest Engine. Now my Invest Engine portfolio contains mostly ETFs. Well, it's a lie. It fully contains just ETFs.
Absolute 1,000,000% bullshit.
This is about £15,335 at the minute. It has an overall investment return of 43.87%. Now in this you can see my net contributions and my value at current. So I started investing with about £5,000 back in April 2022. Since then it's grown. So what did I invest into? 10 grand in the S&P 500, IUSA in the UK with iShares, and then I put another 2 grand at the time in this IITU. Now this is the iShares S&P 500 information technology sector. So this is an ETF that's outpaced the S&P 500 for a long time now. I think the past it's 5 years old. Let's have a look. Oh, it's coming up to 10 years old. Pretty sure it's had better gains than the S&P 500 every single year from its initiation. So if we have a look at the holdings within, I got really lucky with this because it gave me quite a lot of exposure to Nvidia. I say lucky, but I knew I wanted exposure to the information technology sector. So I bought into this ETF and it's really boosted my performance in this portfolio, in the Invest Engine portfolio. Nvidia has grown to become 20% of this ETF. Now moving on to the Trading 212 portfolio. Now with this, the goal is to beat the S&P 500, and at the minute I am beating the S&P 500, and it's been about 2.5 years since I started this portfolio, and over that time I have outpaced the S&P 500. And I have a graph here to show you by how much I've outpaced it, and you can see that there, and I show that in all of my portfolio updates so you can see whether I am actually outperforming or not, whether I am the GOAT.
The GOAT! The GOAT!
But nevertheless, the Trading 212 portfolio currently sits at about 47 grand, just under 46,981, with the total return of 12,283 and the rate of return of 103.3%. My top holding is Amazon. Now I own about £7,760 worth of Amazon, with 1,282 of that being gains. It's up 20% on an overall basis, but not on an initial investment basis. Like my initial investments into Amazon are up over 40%, I believe. But if we have a look at Amazon, we go on Max. So I started buying in about January 2024. So here it was. I bought my first few shares around here, and that was just before earnings. They posted earnings and it shot up really quickly. And this is because it was becoming a lot easier to value Amazon at that time, because during that time they had decided to become more of an efficient business, and they went on a cash generating run whereby they went from minus 30 billion to 45.7 billion in free cash flow. And I bought in just before they announced their latest 45.7 billion free cash flow. It becomes a lot easier to value a company when they have free cash flow, whereas at the minute Amazon just usually reinvests all of their money straight back into capex. It becomes hard to value the stock for that reason. I do believe Amazon is a buy today. Moving on to my second largest position, which is Hims & Hers Health. Now, Hims & Hers has been a bumpy ride, but I bought into Hims & Hers recently, basically after Liberation Day. At one point I was over £1,000 in the negative on this position. I have £6,831 in the position, and my return at the minute is 24%, about £1,349, which is really great. I mean, you can see here on the chart, I bought in about here. I bought it, my initial buy was about £45, and then during the Trump crash I bought in a hell of a lot more, and I say a hell of a lot more. I didn't have enough cash to just dump all my money into it, but I bought in some more and it lowered the price, and then we shot back up. I was up a lot at this point, and then recently we've had some drama with Novo that I've covered in my previous video, that if you're an investor in HIMS, I do recommend you watch that video just to see what's going on. So yeah, HIMS is obviously outperforming the S&P 500 right now. It's doing really well for me in the portfolio. It's really boosted my gains, and yeah, that's it for HIMS. Moving on to Uber. Uber has been great for me too. With Uber, I was buying in 2024, in December 2024, after it took a big dip. Let me just find that. Here we go. So if we look here, hit December, it was right down here, and you can see my buy-in price on the screen at the minute, 63.38. Uber for me is a £5,596 position, with £1,440 of that being gains. I did just take £400 out of Uber as it is run up so quickly, and I'm going to reposition some of that cash into another pick of mine that we'll go through today, and I'll actually do that in a minute live. I say live, but you're watching the YouTube video a few days later.
That's your bitch ass up.
At the time that I bought it, it was trading at a very dislocated price, and that was all because of the announcement of the robo-taxis, and it went down to that 63.38 price. Moving on, we have S&P Global. S&P Global for me is a £4,424 position, and it's about £657 in the green, with about 17.46% being my gains. I started buying in about July 2023, and since then it's actually underperformed the S&P 500, which is a shame. But I still think the thesis with S&P Global reigns true. Just quickly here, actually, I just want to mention that most of my stocks actually have the percentage gain. You'll see a huge knockoff in price from the FX impact. So we've got 6.5% on Amazon. I think S&P Global has a larger percentage knocked off, about 8% on S&P Global. You know, it's annoying, but that's how it is being a UK investor. Hopefully over time, as I invest, that should kind of even out, especially over the years. I'm in this for the long term. So moving on, we have Texas Roadhouse. Now Texas Roadhouse is a £4,372 position for me, and the return is about £1,600 at about 57.27%. And then obviously there's the FX impact to take into account, but I wouldn't bother with that. I bought Texas Roadhouse in September 2023, and there was a large dip. You can see it here. I started buying around here and buying on the way back up, and I've averaged up since then, which is why the price has moved up. But my initial price was about $101, and so I'm coming up to 100% on my initial investment here. And they were selling off at the time because of Ozempic and Wegovy being released, which is essentially the weight loss drugs. If you haven't heard of them yet, loads of people are on them. You probably know people that are on them. Essentially, it's just like a wonder drug that makes you lose weight very quickly. And the thesis at the time was that people were going to not eat out anymore. And Texas Roadhouse is obviously a lovely steakhouse in the US. And people just believed that consumers weren't going to eat out anymore because everyone was going to be on Ozempic or Wegovy. Now, I didn't fully believe that thesis, and yeah, I started buying during that dip, and it's really paid off for me. Texas Roadhouse is a big performer in my portfolio. I wish I had more money to put in back then, but I'll take the gains any day. Next up, Netflix, which is another one of my best performers. Netflix, I have a portfolio position of £4,016, with my return being £1,864 with 86.64% on my Netflix position. You can see where I was buying in. Well, actually, my first buy was in January 2024. It was about $474, and it shot up after earnings, and then stupidly actually sold a little bit here. I sold a little bit here, but it's okay because I invested it into Amazon, and that then shot up about 10% in a day because they both released really good earnings, which is what I was expecting from both of them. And after that, they've absolutely run away with it. Netflix has absolutely run away with it. With Netflix, their price was dislocated because of the huge doubt they went through in 2022, which caused their subscriber growth dropped a little bit, and it caused their stock price to plummet, and it took them ages really to recover from that. So it just meant that their stock price was dislocated for such a long period of time. And even though I bought in, almost coming up to 2 years after, the fact, it was fine because their price was still dislocated, and I believed in that at the time. Moving on, we have ASML. Now, ASML has been a slow burner for me. I have a £3,681 position, and it's £113 of that is gains, only 3.2%, which is very unfortunate. I bought in around November, and it's barely moved since then. It's only really moved up recently because of the foreign exchange effects. I don't know why I bought into the dollar version. I should have bought into the euro version.
Stupid.
They're not.
ASML in euros really hasn't moved that much anyway, so my gains will be the same. ASML has underperformed the S&P 500 so far, which is not ideal, but it's a cyclical business, and we'll see what happens.
What's wrong with you, bro? What the heck?
Moving on, we have Mastercard, and I'm going to cover Visa here. Now, combined, they make up a total of about £5,100. About £5,100. Individually, we have Mastercard, £3,263, with a gain of £590, about 22.15%, and Visa, £1,856 in Visa, and a gain of £409, which is about 28.29%. Both of these have taken a dip recently. I've been buying these since I started the portfolio back in 2023. I think it was July 2023, and I've continued adding to them as the portfolio has grown. They have actually outperformed the S&P 500. And the story with those is that they are essentially just a toll booth on all of your card payments as cash slowly transitions out of the economy, which it is right now. Mastercard and Visa will continue to grow and take a toll booth transaction on every single payment you make. That's why I think that they will continue to outperform. But yeah, if we have a look back to when I started buying in, it was around here. Bought during around these times in Mastercard, and yeah, I've averaged up a little since then. But these two have been great outperformers for me. Next up, we have Booking Holdings. Now, with Booking, I have a position of £2,974, and I'm up about £750. Now, I have actually taken some gains in Booking before. That is about 33.77%. I'm up at the current moment. I bought these in July 2024 after their dip, which was just after earnings. So they had earnings, the stock dipped quite a bit. I bought during these times, and I've averaged up a little bit since then. But yeah, Booking has been really good for me. They return so much cash to shareholders through buybacks and dividends. And yeah, I can see I'm going to keep Booking in my portfolio. They're a really solid bet, I think, and they will keep returning cash to me. Next, we have Meta. Now, Meta I bought recently off the back of a Trump dip, and I only have about £1,286 in Meta, and my return's been really good. Really recent buy. If we have a look at the past 3 months, I bought around $572, and it shot straight up to $716. That's a 21.86% gain within a matter of about a month and a half, 2 months, something like that. So that is really good performance from my Meta buy so far. Lastly, we have Alphabet, which is Google, and they are my current play. I'm very bullish and believe that ChatGPT will not ruin the search function of Google. Not only that, but they have plenty of other bets. I've covered that in a recent video. They've just shot up. It's annoying because I want to continue buying into Google, and they've just shot up about 1%. It's alright. Let me get some money in this account, and I'm going to put another £400 into Google right now. Right, so I'm going to be buying Google anywhere under 190, and I think Google is a buy anywhere under 190 at the minute. So I'm going to take this chance to put another £400 into Google. Yeah, we'll go with 400 years. There we go. We have bought Google. My average price has just moved up to 173.82. So yeah, slowly creeping up. And Google, I think, is really dislocated from its price. Anyway, that is going to conclude my portfolio. I hope you enjoyed and you can take some learnings from my portfolio. If you liked it, check out my other videos. See you next time.
I'm hopping out Ferrari. My house is 3 stories. I'm still independent cause jobs couldn't afford me. The meetings were boring. For real, I was snoring. The VP was fine, yeah, she treated me kinda corny. But that's another story. Let's get back